The shilling has continued to weaken against major currencies, closing Thursday's trade at 108.1 units against the US dollar. It is the first time the local unit has breached the 108 units to the greenback mark and sends a signal of the rising pressure from the external environment. The weakening comes against the backdrop of high liquidity in the money market, with the interbank rate averaging just 2.3% as at the close of Wednesday's trade. Well, this weakening comes just 6 days ahead of the July Monetary Policy Committee meeting, slated for Wednesday next week. Available data shows that the central bank mopped up 26.7 billion shillings of excess liquidity today against its targeted 45 billion shillings. The Kenya Private Sector Alliance has called for greater public-private partnerships to help cushion businesses from the adverse effects of COVID-19. Speaking during the Alliance's annual general meeting held today, Chairperson Nicholas Nesbitt said the business environment has, over the last 12 months, registered significant improvement owing to increased dialogue between the public and private sector.
In terms of lending, the lending rates averaged 12.24% as CBK lowered the central bank rate to 8.5% and private sector credit managed to grow by 7.1% following the removal of interest rate caps in November, which was largely achieved through a lot of the engagement from KEPSA members with government at different levels, pushing for lending flexibility.
The government has borrowed an additional 80.9 billion shillings from the domestic market through the bonds reopened this month. According to the dates from the central bank, the reopened 5, 10 and 15-year bonds attracted bids worth 181.8 billion shillings against a target 60 billion shillings, showing high appetite from investors. The three bonds were on sale between the 6th and 21st of July with a minimum investment amount of 50,000 shillings. The 80.9 billion shillings mobilized will be used in providing budgetary support in the current financial year.